All right, guys, welcome back for another video. Today's video, I want to do an update to the Ethereum video I uploaded a little while ago. I didn't really talk about the market dynamics of Ethereum, at least in price action in that chart. So I want to dive into that a little bit in this video. And I think the most important chart for Ethereum is not the Ethereum USD chart, but the Ethereum Bitcoin chart. I think it's absolutely critical, one of the most important charts in crypto. Uh, a lot of people look at the Bitcoin dominance chart to gauge the strength of altcoins, but I think really you want to be looking at the Ethereum Bitcoin chart. Ethereum is without a doubt the number two altcoin, but not only that, most of the other attractive altcoins, that have a promising future are also built on the Ethereum protocol. So I look at the Ethereum Bitcoin chart to gauge the strength of the altcoin market. So just doing a typical price action view of this chart, this would be the swing I'd be looking at right here because this is your impulsive move up. So you've got roughly defined this swing here, marked off by the way I framed my chart. So basically in March 2021, you had a parabolic push on Ethereum BTC running well above these highs right here, parabolically up into this consolidation range, and then you get a little bit of a bull flag morphed into a distribution pattern. You can see, you get relative to this parabolic rise, you get a period of contracting volatility, then a run right up above these highs, slam back in the range. I bet if we went to the RSI, yeah, you can see that the the divergence on the RSI is building, and it's just showing you that price has moved from a parabolic ascent into a distribution phase. And this divergence here was confirmed when you formed a high over here. Um, Probably officially when you took out the lows here with this close right there. Now you've got your swing high. We can mark that off real quick. This area right here. Again, it's not perfect, but you get your confirmed divergence above there. And then price comes down back into the range. Anytime you see this type of behavior, right, price popping above liquidity like this and then slamming back down into the range, generally is not a good sign for bullish continuation, right? You want to see price break above the range and hold there. And if it does retrace, only very briefly before, continuing on very quickly. You want to see that close above and then the quick continuation, right? If price closes above, drifts down, or even moves back down into the range aggressively, that's a major red flag that this is a distribution pattern as confirmed by what we saw in the RSI, and that this is ultimately going to look for liquidity to the downside. Now, after it did that behavior, it came down here and defended these lows, right, creating a higher low right here. So that there's a couple of bearish things happening at this point and a couple of bullish things happening as well, right? You got your series of higher lows. So it's really not until this low is broken here. So that's really the critical area that I wanted to mark off. It's very easy to see with this trend line right here, but this is a weekly chart, so it's very significant. So you've got a low, a higher low, another higher low, and ultimately your breakdown below these lows. So you can mark off this level right here when price came down and took out this weekly level right there. You have a break of structure on the macro time frame, very significant. So price ultimately came down here. A little bit of a shallow retrace, right? Normally you would expect price to at least reach down for these highs right here. Well, it didn't get there exactly, but you could go down to the daily to see where things started turning around, right? Price really starts taking out the highs and moving upward here. So it's not necessarily right here where price started to do that, but once you start taking out this area right here, these highs, then you get your push up to fill this liquidity up here. So if you were short on the ETH-BTC pair, this would have been a good area to manage risk. You could have had a trailing stop, right? Maybe you were on the weekly chart and you were in a short from up here, looking for a little bit of a deeper retrace. Well, you have that stop loss. One important thing to mention about a stop loss or a risk management tool is that it really doesn't matter where your position originated from, right? The risk management areas are always going to be similar, no matter where you opened your short position. So that's always something to keep in mind. If a structure does break around to the upside, then you want to manage that. But just going back to the broader weekly chart, pulling this level off, what we see here is a very, very classic pattern. It's actually a pattern that played out in Bitcoin during the March 2020 distribution pattern. And I'll go visit that shortly, but I just want to put this here on the chart. A lot of times, you'll create this break of structure, price will go down to some undetermined area and then rally into a bearish retracement. And it's only after the break of structure that you would be looking for the bearish retracement, right? Because, until you get this break of structure, right, there's just no valid bearish retracements, right? You do have distribution patterns, but if you were playing say a bearish retracement right here, right, you would have got ran through as price ran up and distributed. So it's one thing to keep in mind, right? When you have a distribution phase in the market, what's happening is, price is running above the highs and distributing above there. But once you have your break of structure, right, the distribution's over, the market's entered a new phase of price delivery, and generally you won't see new highs created after that market structure is broken. And that's why I would then, bearish retracements would then be, valid in that case. So I just want to go to Bitcoin and show where, that a similar type of characteristic showed itself. If we just go back to the spring 2021, so if you look right here, you got the same characteristic that we just showed on BTC, right? You've got this series of higher lows right there, broken. So whether you're looking at this low right there or this low right here, you could make the case for either. You really could make the case for either. The point is that you get a distribution phase marked by a break in market structure, and then then the bearish retracement becomes a valid operating tool, right? You get your distribution, run above the high, then come down, break structure. Whether you look at it as there or there, you still get the same effect. And ultimately, then the market changes the state of delivery and changes it very quickly. So, we're seeing a similar pattern on FBTC. Again, it's not a guarantee that, the market will 100% play out that way. But I think it is pretty significant considering we're seeing it on a weekly chart. I do think that holds more validity than just seeing it on like a 4-hour or 2-hour or 3-hour chart. But we see that same pattern here, and then price is retracing up into, if you were to draw this trend line out, right, you can see it broke structure, then retraced into that area. Again, the market structure is flipping around its delivery. Now, the 618 is not an exact area. It's just showing you when price is entering into premium, and that you would be looking for some distinction to be playing out on that time frame. Now, what we want to do is, as we go down in the time frames, we want to see some confluent ideas on the daily and the 4-hour. So we've analyzed the setup on the weekly that looks good. But now if we go down the daily chart, we want to see something that kind of lines up with that idea. And let's go down to our momentum oscillators on the RSI. Yeah, you can see that price came up into that area of interest, right, beyond the 618. So it pushes up into that premium area that we're looking at. And as soon as it does that, price starts entering a distribution phase on the RSI. So you do get higher highs, but you get 3 drives of divergence, and now price is closing below those lows. So it's showing you that that this rally is weakening, and it could go down and fill this area right here. So what we would expect to see is that type of behavior play out on the 4-hour as well. Now, if we just mark out this level very objectively and, being as conservative as possible, really the level we're looking at is this level right here. So I'm just going to pull off every other thing we put on the chart and just mark off that exact area of interest. Your 0.06514 level on Ethereum Bitcoin, right? Why is that level significant? Well, that's a low that made the most recent push of liquidity. So whenever you're contextualizing a swing high or a swing low, it's which, because there's a lot of them to choose from. So I always pick which one is the swing high or swing low that created the most recent breach of liquidity. That's the anchor point that I want to look at. And the flip side of that is also, if this area is broken, that becomes a market structure break or a breaker. So that would be the area I'd be looking at. Like if you get a 4-hour close below these lows right here, there's a high likelihood that you get a topping formation on the daily, and at the very least a retrace down to here. But probably with what's going on the weekly, retrace much lower lows. But again, you got to take one thing at a time. You don't want to get ahead of yourself, because while we do see, a signature here on the weekly, we want to see those lower time frame confirmations and not, get too gung ho with with the entries. So that's lining up with last week's close on Ethereum BTC. I think this is a very actionable trade. And again, I would, be waiting for that confirmation before, entering any short positions on FBTC. The one other element that is at play is you have the Ethereum merge coming up, which is scheduled for mid-September. So we could put that on the chart. We'll just, for the sake of this, just do right in the middle of September 19th. There's a high likelihood that the actual merge, you're right, when you see news on your social media feed that the merge has completed, there's a really high likelihood that will be a date that the market sells off, right? It's a classic buy the rumor, sell the news. Now, it doesn't mean that the merge wouldn't be a good thing fundamentally. It just means, typically that type of retail demand is sold into, makes for a little bit of a sell-off. So you may see, regardless of this price structure that's setting up on the weekly, you could see price bid up into that September, mid-September date, just based on the nature of hype and market demand, and then sell off there. But I would say, if price starts breaking structure, then you still have to take that break of structure into account and allocate accordingly. I do think this is a very actionable setup, because you're very close to invalidation, right? If you basically have a scenario where you can mark off right here, this high right there, and that low right there, right? I would argue this is your range, the current range you're operating in, up until the Ethereum 2.0 merge. That's going to be roughly in September. Now, if you see this RSI distribution pattern play out, then it probably goes much lower than here. And then again, if you see these highs reclaimed, this whole trade idea is that we talked about with this break of structure into a bearish retrace, a bearish golden pocket. It's no longer valid, but these are actionable levels that you can base a trade idea off. Now, one thing to keep in mind is that this is an Ethereum BTC chart. So if it chooses the downside path, it doesn't necessarily mean that Ethereum will go down in USD terms. It still could go up, but it does mean that it would lose value in BTC terms. So that may be a market dynamic where Bitcoin is taking the lead, which is actually typically what you do see, following a period of a downtrend or a decline, typically Bitcoin being, the king of the space, will generally take the lead initially in initial bull runs, not bull runs, but initial phase of a rally, and then altcoins will follow up and take the lead from Bitcoin afterwards. That's typically a characteristic you saw. We haven't really seen that characteristic since for at least a year or so, which actually, in other people's minds, that they interpret that as, well, that we're not going to see it again because we haven't seen it in so long. But the fact that we haven't seen Bitcoin take the lead in a while lends me more towards the attitude of, well, that means it's likely to happen soon. Uh, but again, it's just my perspective. It is something to keep in mind, because if Ethereum is going up in USD terms but down in Bitcoin terms, people feel like they're in the right side of the trade by being long Ethereum, but really the trade is to be long Bitcoin, and then get into Ethereum once it starts showing strength on the Ethereum Bitcoin chart. Just a little bit of subtle nuances to keep in mind. But again, I do think Ethereum has incredible upside. I just don't like the current price setup that it's at trading right now with Ethereum BTC. Again, I'm looking for long-term positions to build in Ethereum, and I've got incredible patience, right? Uh, you know, we may be in a period of the bear market where stuff just grinds sideways and bores people out of the market, and we might be in for a few months of that type of behavior. And if that's the case, then I don't really have a lot to be there's no reason to not have patience in establishing those long-term positions in Ethereum. If you're curious about what a long-term position in Ethereum would look like, check out the Ethereum staking rewards video that I uploaded, because that's really my base case for what kind of long-term position I'd be looking at in Bitcoin, or excuse me, in Ethereum. So check that video out if you haven't seen it. Leave a like on this video, subscribe to the channel, and I'll catch you guys in the next upload.